Hi, so I'm here today with Sammy Cooper-Smith, Business Development Director at Rothesay, who's the UK's largest pensions insurer. Sammy's been involved with brokering some of the biggest deals that we've seen over the last 18 years. Sammy, over to you.
Hi, Alan. Thanks very much for having me today. Looking forward to the conversation. Looking forward to open, honest conversation. Lots of questions. I guess back over to you.
So obviously we've seen a significant increase in the volume of activity in the market over the last 18 months. And one area of growing concern for trustees is the ability of insurers to meet that demand in terms of the administration of policies, both during the buy-in period and after the buyout has been completed. Do you think these concerns are valid?
So the concerns are valid. Whether or not in reality the service is good or bad, the concern is valid. In the decision-making process, it should be more than just price. Ultimately, the members are going to be with the insurer for a number of decades to come, and the service they get is going to be the bit that they focus on. They won't be aware of what was paid originally for the premium or not. Now, at Rothesay, we've been planning ahead. It's been quite clear that the volumes were going to increase. So, we've hired strongly into what we call the transition team. That's the team that work with you and your colleagues post having selected an insurer to make sure the transition of the scheme moves smoothly from where it's the incumbent administrator to ourselves. And then we've been working very hard with APDIA and Capita and WTW to plan ahead to make sure we've got enough resources to manage the administration requirements into the future. But yes, as you say, it's a valid concern, and ultimately, if you don't think you're going to get the service that the members deserve, then that should definitely be embedded in whether or not you transact with a given insurer.
So you mentioned the selection process there and price in particular. Is price always the dominant factor from what you've seen? Have you ever participated in a process where the cheapest price hasn't necessarily won the deal?
Yeah, frequently. I guess the challenge comes down to really how you define cheapest. Yeah, so on any given transaction, it's £100 million. Is £10,000 the same price? Probably. Is 100 grand? Maybe. Is 2 million? But on 100 million, that's clearly a price differential. But we've seen trustees go with the non-cheapest insurer on many times. I'm not sure we've seen it where it's a material difference in price. I would have thought for most conceivable differences, if you're going to have such a clear preference, trustees might have excluded the insurer up front. If there's something specific about the insurer which is a concern, it's unlikely that price talks, and that they probably would have excluded them up front. But for sure, we've seen trustees go with insurers who weren't the cheapest, and I'm aware that decisions have changed as a result of the presentations, and they've changed in the room based on the job that an insurer's done.
So we've seen many participants come and go over the last 18 years, the likes of Paternoster, Synesis, Lucida, MetLife. And we're now seeing a new influx of companies joining the market over the last 6 months or so, the likes of Royal London and Utmost Life, and I know that Brookfield Asset Management have made their intentions as well. So, how do you think this influx of new entrants will impact the market?
You're right, Alan. Over the years, we've seen people come and go all the time, and there are people coming into the market at the moment, and competition sometimes drives innovation, which will be good for the marketplace. I don't think we as a business shy away from competition. We, of course, have worked with schemes exclusively. I don't think it's necessary at all. I think, where you can get competition, that's good. I think we have a strong offering for pension schemes, but as do a number of our competitors. So I'm aware that some people go in the room and push for exclusivity quite quickly, quite early. I would encourage trustees, if they are thinking about going down that route, to talk to the insurers first to see what each insurer might be able to offer, because each scheme has its own unique characteristics and issues to deal with, and without speaking to all of us, it's hard. Now, having done that, it might be clear that you want to work with one insurer. It might become that actually there aren't that many choice in the marketplace. But exclusivity, I don't think, certainly in terms of the market space that we're in, which is north of 100 million, probably north of 500 million, it's unlikely that schemes are going exclusive straight away. As to the new entrants, it's hard. So there's obviously Utmost have announced and Royal London have announced, and there's noise about Brookfield, and I'm not sure with Brookfield we know quite yet what their target market's going to be, but the others, it seems to be towards the smaller end of the market, but that's going to increase capacity there, and whether people who used to target the smaller end now nudge up their appetite a little bit because competition's grown, and we'll see people participating where they didn't used to at the larger end. Time will tell, but it's certainly not something which causes us any concern. And time will tell. We've seen, as you gave a whole list of different insurers who've come and gone over time. Whether or not everyone who's active today is active, 2-3 years from now, only time will tell.
Yeah, so no buying process is ever perfect, but what are the main obstacles and problems that you've come across in the deals that you've worked on?
I think for us, probably the biggest frustration is lack of clear feedback on a process. Quoting is not a cheap or easy process. Now, obviously, we have a number of people in the team who are there to provide quotations. That's part of the function and service we provide the marketplace. But having put all of that time and effort in, getting clear feedback really helps us provide the best possible price and the best optimal solution to a scheme. So it's frustrating sometimes when you get absolutely nothing back in return. And even more frustrating is at the end of a process when the business is placed to still receive nothing. So you've received very little back in return for the outlay and the effort you've put in. Other than that, I think over time, anything where we've had specific frustrations or obstacles, as you've read them, the market's learned and things have adapted. So, we used to quote in processes where only the trustee was involved or only the company was involved, and those things would tend to fall over, and I don't think that exists anymore. Clear benefit specs, data presented in a clear manner, that's always, that has been a frustration in the past. That's got a lot better. Requirements on the asset side being very clear as to what schemes want from a price lock. Now, earlier on in the conversation you asked about, does price always win through? And I said no, but actually I should have mentioned price lock as being really important. We've seen processes where we have had a better offer on paper, and we've either won or lost it from a winning or losing position because of the quality of the price lock offering. And learning that along the way, that has been an obstacle or frustration, but you learn from the feedback the market gives you and you try and adapt your offer. So as now we would try and reflect the scheme's assets as best we can in the price lock to give as much economic certainty to the trustee and sponsor if they're involved as to the price and the economic impact on their balance sheet.
We can't go through any of these discussions without mentioning AI. So, what's your view on AI, and how do you think that will enhance Rothesay's business?
So we already are using AI. So we've had an ongoing project for some time. The first use of it was on the administration front. So as you can imagine, when you work on a residual risk transaction, you get provided thousands, tens, if not hundreds of thousands of documents. You might be wanting to check members' date of birth, marital status, date of death. We've developed a platform or a system whereby it interrogates all that paperwork, identifies which is likely to be the marriage certificate, which is likely to be the birth certificate, which is likely to be the death certificate, then scrapes that information, presents the most likely document to the end user, to the individual, the colleague involved. They open that first document, which the AI has identified as most likely to be birth certificate. It is the birth certificate, and therefore you have the information you need immediately, as opposed to someone having to laboriously click through one document after another to find the one thing you're looking for. Now, at some point, I think we'll develop that thinking to take on trustee rules and help us on the residual risk to understand exactly what the benefits of the scheme were. That will take another level of effort, and I'm sure will require quite a lot of checking in the early days to see the accuracy. Whether that proceeds to be something we use routinely, only time will tell. But AI should help us develop, I guess, more effective and quicker processes so that we can deliver more solutions to more pension schemes.
Sammy, it's been great to talk to you. So we'll finish off with a chance for you to blow your trumpet for once. So looking back over your time in the industry, what one deal are you most proud of?
I've actually been asked this question once before. It was actually internally got asked, and I'm going to give a cheat answer and say two actually. So obviously the Prudential transaction, just because of the scale of it, £12 billion and the time involved, beginning to end, it was about 10 weeks, and it was a huge accomplishment. But that's probably not the proudest one. The proudest one was actually in the summer of 2019, when we did 4 huge trades at the time. So we did a transaction, people with Telland, and then with National Grid, and with Allied Domecq, and with Asda. I don't think anyone in the marketplace expected us to write all 4. I don't think we internally expect us to write all 4, and we ended up transacting something of the order of 15-16 billion pounds within, I think it was probably 8 or 9 weeks. And the way in which the company pulled together, the way both the asset side, the liability side, the legal side of the business, admin, transition, just the whole of Rothesay pulled together to make what had felt not impossible, but very close to achievable, and the fact that we were working with pretty much the whole marketplace at the time. That summer was a particular highlight. Yeah, and I'd love to come back and do this in a few years' time and say we found something to beat that. So only time will tell.
Well, I asked you for 1 and you gave me 5, but I'm not going to hold that against you. So, Sammy, great having you here again, and looking forward to talking to you, catching up soon in the future.
Yeah, thanks, Alid.